All right. We are live. Just gonna wait a few moments. I'm gonna start just a minute or two after 8. We are live. All right, guys. Welcome to the stream. Welcome to the stream, each and every one of you guys. So today we're going to talk about the MACD strategy. Okay, so in other words, MACD, right? MACD, in other words, moving average convergence divergence. We're going to talk all about that. We're going to talk about obviously we know it's a popular indicator, so more than likely you've probably heard of this indicator before. There are different ways of using this indicator. In this session, we're going to talk about one specific way that we use it, that I use it, and how it can be helpful and beneficial to your trading. Okay, so let me just write out again our objective here. So today we're talking all about the MACD. So again, MACD stands for moving average convergence divergence. All right, moving average convergence divergence, that's where we get MACD from. And one of the reasons why the MACD is so important is because of some of the problems that it solves, right? So what are some of the problems that we have when we are charting up, when we are looking for different confluences, indicators, etc.? What are some of the problems that we have? Some of the problems that we have, I'm going to list two specific ones, right? Number one, how do we have a better idea of when a retest is over, right? So you've probably heard of you want to get in after the retest. You want to get in after the retest, regardless of the strategy. More than likely is going to be a retest strategy, right? So you want to get in after the retest, but you then have to ask yourself as you're actually doing it and you're trading live. Well, how do I know when the retest is actually over? All right. So the reason why it's so hard for traders to actually be able to execute on these trades is because they don't always know when the retest is over, right? So they end up taking the wrong entries. They enter way too early or way too late, obviously, right? The second question is, how do we better anticipate the reversals, right? It's hard to anticipate when a reversal is going to happen. So is there a way for me to actually know when the reversal is going to happen? Is there a way for me to better anticipate the reversal? Like, what signs can give me that? The MACD can give both of those questions answers, and that's what we're going to go through today. Okay, so before we get into the actual indicator, what I want to just establish how the market is moving, right? Or at least how I see the market move. That's what's really important, first of all, before we start applying this indicator to our charts here. So there's a couple of ways that I see the market moving, right? So we have number one, an impulsive move. And I'll write this down for you guys. It'll be here just so you know how the market moves, how the market, my mistake. I forgot I was on caps lock. So how the market moves. All right. We have three main ways on how the market moves, right? Number one, we have an impulsive move, impulsive move. Number two, we have a corrective move, correctively. All right, correctively. And number three, we have continuation. All right, continuation. All right. So there is a fourth. Obviously, we know that sometimes the market is not giving us any of these. Sometimes it's just consolidating or going side to side, right? So we'll just call that for right now consolidation. But these are the ways, consolidation, these are the ways that the market moves. Okay. So these are going to be the ways in which, and let me just try to make that a little bigger for you guys. But these are the ways that the market moves, and we're going to walk through that one by one, guys. All right. So let me just make these things a little bigger for you, and then we'll walk through it one by one. All right. Let's make that a little bigger, and let's make this a little bigger here. All right. Perfect. All right, guys. So let's follow the path in which this chart is moving, and we'll talk about these different moves that we've referred to. Okay, so the up moves, the down moves, all of these things, impulse, correction, continuation. Let me find a decent spot on the chart so I can. All right, perfect. The start of a trend right over here. We're going to start right over here, and we're going to examine in what ways these apply. All right, in what ways do these apply? Impulsive moves, corrective moves, continuations, and maybe some consolidations as well, right? So whenever we have a move, whether it be to the upside or the downside, right? But we have a move that goes directly up impulsively, right? We call that an impulsive move. It could be directly up or directly down, but we have a strong push towards one side, right? That is an impulsive move, right? Strong push towards one side, impulsive move. Then what happens is when it retraces, when it comes back towards itself, we call that a correction, right? So this entire thing over here, although it gives a funny shape, but this entire thing over here is a correction, right? Now, the continuation is the continuance of that move going towards that original direction, that original impulsive direction, right? So that will be the continuation, all right? And as we continue to follow a trend, what we see is that eventually you'll continue to get these retests and continuations, so on and so forth until you have a reversal. Okay, so for example, we had a continuation up here. Right here is a retest. Over here is a continuation. Right here is a retest. Over here is a continuation. And then we finally get to a reversal. Okay. Now, I mentioned that this candle, this big red candlestick that happened here is a reversal. How exactly do we know that this is a reversal? Okay. So what pinpoints to me that this is a reversal? First of all, let's get into real quick what allows us to qualify something as a retest. What allows us to qualify something as a retest is we have to look at the previous low. If we're talking about an uptrend, we're looking at the previous low. If we're talking about a downtrend, we're talking about the previous high. So the low of this move, the low of this impulsive move is right here. This is the low of this move, right? So as we move up impulsively, the correction is a correction so long as it stays above the low, the previous low of the move. Okay, so the lowest that this correction got was here. And because this low over here, one second, because this low over here is higher than this low, this is a valid correction. Okay, so now as we move along, Where is the next correction? Price continues to go up. Technically, you could say the next correction was around this area right over here, right? And if we compare this low, this particular low, to the previous low, we see that this low is higher, right? So the previous, it did not pass the previous low, so it is still a valid correction, okay? And this continues on. The next correction is over here. It matches the previous low, but does not pass the previous low. We have a solid correction, fine. And then the next correction is right over here, same thing. It is not lower than the previous low, but the problem arises when we get to this area right over here. When we get to this area right over here, we see that the new low that forms is all the way down here. Meanwhile, the previous low, right? Meanwhile, the previous low is right over here. Okay, so this is why we classify this move, this entire move over here, we would classify it as a reversal. Okay, so I'll just call that out. So this right here is a reversal. Now, as we examine this move here, it would be nice if we knew if the reversal was happening for many reasons, right? For reasons in which maybe I was in a buy trade, and maybe if I had a better indication that this reversal was coming, maybe I would have been prepared and I would have got out. Maybe I would have protected myself a little better. Or maybe I would have got in impulsively on the sell if I knew that, if I had any kind of indication that the sell was even coming, right? So valid questions, and all of these things can be answered and can be shown through the MACD, okay? So I'm going to remove a lot of this stuff just so we can start looking at now how we start using the MACD and how that comes into play, guys. All right, so just a second. We're going to remove a lot of this stuff over here. All right, and we're going to start talking about the MACD, guys. All right, so the first thing I want you to do is we're going to go to our indicators tab, right? And just a second as I remove this last one here, right? We're going to go to our indicators tab. Right here on our indicators tab, we're going to type in MACD, all right? And specifically the one I use is called MACD4C, okay? MACD4C, and the owner of it is VKNO422, okay? So MACD4C. Now, I just want to just let you know, obviously there are many different types of MACD strategies. There are MACDs with different types of indicators as well. So this is a specific MACD that I'm showing you today. Maybe on another session, we'll talk about another type of MACD. But the MACD4C is the MACD that I use. And what we're going to do is start to understand the different parts of the MACD, right? Moving average, convergence, divergence. So a lot of traders tell me whenever they're looking at the MACD, oh, well, this mountain, what does this mountain mean? And what does that mountain mean? So it's not necessarily a mountain, right? But these are this is the histogram, okay? So when we talk about the parts of the MACD, let's just talk about real quick the parts of the MACD. Right here, parts of the MACD. So number one, you have the histogram. That is those little quote unquote mountains that you see there. We call that the histogram. Number two, at least for this particular MACD, number two, we have the zero line, okay? Number two, we have the zero line, all right? And let me get into specifics on what I mean, okay? So when we talk about, again, the MACD, when we talk about the MACD, we have two parts. We have the histogram and we have the zero line. So the histogram, I'm going to extend this up here. The histogram is what you see here. These things look like mountains, right? The peaks that you see that's going upwards and some downwards. This is what we call the histogram. And there is something attached to the histogram as well, which is there's a color, there's a light pattern, right? Not necessarily a color pattern only, but a light pattern, right? So we know the upward moves, upward momentum is represented by the green color, and downward momentum is represented by the red color. However, in more detail, you see that within this space over here, let me try to expand this just a little bit. Within this space over here, you can see clearly that we have some that's shaded lighter and some that's shaded darker. All right, we see that for both the green as well as the red. Some that's shaded lighter, some that's shaded darker. Okay, so all of this has significance, and we're going to talk about the significance right now. Okay, so when I'm looking at the MACD, when I'm looking at the histogram specifically on the MACD, what it's representing the momentum, right, within the move, but it's also letting me know when momentum is starting to die. Okay, so it's showing me the momentum within the move, and that is represented by the height sometimes of the histogram, as well as the shade of the the histogram. Okay, so very important rule over here. I'm going to put this on the side just so you guys can remember. When it comes to the histogram, right? So MACD histogram rules, right? MACD histogram rule. Rule number one, when it comes to the histogram, as far as the bullish side or the green side, all right? Bullish side, okay? When we are losing momentum, this is all I want you to know. All I want you to know. When we are losing momentum, it starts to shade darker, right? When we are losing momentum, it starts to shade darker. Okay, that's for the bullish side, the green, or in other words, green. Let me put that over here so it's very clear to everyone. All right. When we are losing momentum on the bullish side, it starts to shade darker. Okay. Now, for the bearish side, the bearish side, or in other words, the red side, okay, when we are losing momentum, who can let me know what's going on? When we are losing momentum, all right, I see Slim in the building. What's going on, my brother? All right, when we are losing momentum for the red side, it shades lighter, okay? For the red side, it shades lighter, okay? I'm going to repeat that again. I want you guys to know, because once we understand the difference between the two, everything else becomes so much easier. This is an easy indicator to understand, but you have to know the rules. You got to know the parts of the indicator, and you got to know the rules, okay? So again, you have the bullish side, which is green. You have the bearish side, which is red. When the bullish side is losing momentum, it tends to give us a darker shade, as you could see right over here. As you can see right over here, losing momentum, it gives us a darker shade. Okay. As the bearish side, again, going back to our notes over here, as the bearish side is losing momentum, it shades lighter. All right. Where is an example of that? Right over here. Right over here. As the bearish side is losing momentum, it shades lighter. So what do I mean? Can I show more examples of this? How does this apply to the actual charts? Yes, I can show more examples. Let's get into the charts real quick, okay? So now as we get into the charts real quick, let's follow the histogram real quick, right? So the histogram is going to mimic what's going on the charts, right? So on the charts, what do I see here? We already established what types of moves we have in the market. Impulse, corrections, continuations, right? So we have an impulsive move, right? A strong move to the upside. What do I see on my histogram as the histogram is lining up with this, right? I also see a move to the upside, right? Let me just remove this ellipse so it's clear for you guys. I also see a move to the upside, right? You can line this up as much as you want, right? We also see a same move to the upside. Now, when we get the correction over here, small correction, but we get a little correction over here, what happens to the histogram? It also gives us a correction, right? The histogram also gives us a correction. And now when we get the continuation, right, the histogram also gives us a continuation. So the histogram is mimicking pretty much everything that's going on the charts. Now, what I want you to see, again, showing proof to what I said here with the histogram, the bullish side, right? We know the bullish side is losing momentum when we see a darker shade of green, right? So after this big impulsive move happened, the retest was coming. So what happened? What did we see on the histogram? We saw that it literally went from light green, excuse me, it went from literally light green to dark green. Okay, again, the histogram went from light green to dark green as we saw the retest starting to form, right? And when the retest was done, approximately around this area over here, when the retest was just about done around this area over here, and we'll line this up, right? What started happening to the histogram again? It started turning light green again. Okay, so it started turning light green again, letting us know the bullish momentum has returned. And now we can come back into, so in other words, if you are getting into a trade, right? If I'm getting into a trade, or let's just say I'm already in this trade, let's say I'm in an EU buy, right? And I know a correction is coming and I just want to stack in, but I need the exact moment. You know, it may not be perfect, but I need an approximation of when the retest is over. How do I know for sure in the live market that this won't retest down here? You understand? How do I know that it won't retest down here? How do I know that at this particular area, I should be looking for an entry? How do I know that? I know that one of the ways I can know that is by following the MACD histogram. And a rule of thumb that I use, guys, a rule of thumb that I use is after three, let me expand this, after three candles on the histogram that has shown me light green, after 1, 2, 3 candles show me light green, the fourth can be my entry, because we've established by now it's not perfect, all right? Don't think that you won't lose at all. It's not perfect, but again, it's a good rule of thumb and it tends to win more often than not, right? By the fourth candle, I know that I can start looking to enter my move for the continuation or for the entry in general, right? So by the fourth candle, I enter my move over here and I continue this upwards. And this is a pretty decent move. And you get your 35 pips right over here. Very, very good move. Very easy move. Not bad at all. Okay. We're going to go through one more example of how the MACD histogram works here. Okay. So starting with this area over here, same thing. So starting with this area over here, we get an impulsive move to the upside, right? Let's look at the MACD histogram. What's going on? We get an impulsive move to the upside. Okay. We get a correction. So going back to the downside. What's going on with the histogram? We have a correction going to the downside. Okay. Then we get a little peak here. The histogram matches it up pretty nicely. Okay, fine. But we get a continuation going upwards. Also on the histogram, we get a continuation going upwards, right? And then we get the correction here and we get the correction here. I'm going to get into what happens over here, right? But I just want to show you again, going by the shades of colors on the histogram. As we are bullish, it's clear that we are bullish. Momentum is showing you by the shades on the histogram, again, that the light green is saying we are bullish, all right? We are good. This trend is good. But as we start turning dark, it's letting you know that a correction is on the horizon, all right? So again, we continue to push up. We can see the histogram over here. As we push up over here, we can see over here on the histogram that the histogram is light green, okay? We're pushing up this bullish momentum. But as the correction again forms, the histogram is letting you know that we're going to have a correction. So this is what I want you to understand now. An added confluence to knowing that the retest is over. In other words, to know that this is the area you need to enter, that this is the area, this specific area is where you need to enter. An added confluence is what we call, another part of the histogram is what we call the zero line. Okay, I don't even see where I put that note. Maybe it's somewhere hiding. But remember, I said the MACD has two parts. This MACD has two parts, as the histogram, those mountain like figures that you see there, and it also has the zero line. The zero line, you may not see it, but it's a line that runs across the middle of the MACD. It literally separates the bearish side from the bullish side. Okay, it literally separates the bearish side from the bullish side. It is what we call the zero line. And usually, what tends to happen is as the histogram gets lower and lower, and it even retests the zero line, it's a good indication. It's a good indication that your retest is valid for an entry, that the retest that's currently going on is valid for an entry. So what do I mean by that? So look at this particular area over here, right? So this particular area, we clearly see that this hit the zero line. How do we know? What proof do we have? We see that little tiny speck of red right there. It hit the zero line. Even if I didn't see the red, we clearly see that momentum hit the zero line right over here in this spot. So now, without even looking at the chart, I want you to look as we line this up, without even looking at the chart, as we line this up, let's now look at the chart and see how significant this area is where the zero line hit, right? Boom, right there. The zero line hit right there, right? And that is an area that's telling me that this may be a good potential area to take my trade, to enter my trade, or to stack in my trade, whatever. But entry is a good particular place at this particular area. Okay, so we know because of the zero line, this gives us entry, and reason for entry. Let me just write reason for entry. Reason for entry, retest of zero line. Okay, so not only do we know that the histogram started to shade darker, but we have a retest of the zero line. And again, what do we say the rule of thumb is? After 3 consecutive candles of light candles, it's okay to say that I'm ready to enter on this 4th candle, even the 3rd candle. It's okay to say I'm ready to enter, and you take your entry maybe around here. So you take your entry around here, and as we look at the chart and we look at the move that would have happened if you took your entry around here, we see that's an easy, again, another easy 35 pips. All right. Now, here's one of the most powerful parts of the MACD. All of that stuff is nice, but to me, that's general stuff. There's many different ways that I could look for a retest. I could look for momentum. There's other indicators. But let me tell you, the divergence part of MACD is probably by far the strongest thing that you'll probably want to use MACD for. All right. So we establish how the market moves, right? Impulsive move, correction, continuation, correction, continuation. What happened over here? What happened over here? Right over here. What happened right over here? What do we call this? Those who are watching, what do we call this? Is this a continuation? Is this a correction? What is this? What is this? Who can give me the answer of what that is? So we have, as you guys are thinking, right? We have, again, we have impulsive move. We have a correction. Over here, how do I know that it's a correction? Shout out to my boy Dylan, aka Thanos, right? How do I know it's a correction? We have here this low. What did I say in the beginning? This low, the lowest part of this correction, is not lower than the previous low. So the correction is valid. All right. How do I know that this correction is valid, right? Because it did come back up a little bit. It did come back up a little bit, right? And then it came down. How do I know that correction is valid? Because this low did not pass the previous low. It's always about the previous low. This low did not pass the previous low. So this is a valid correction. Okay. With that being said, the same kind of knowledge, right? So then you get your move to the upside. Now, this correction, as we get down here, this correction, this is valid. Why? Because this low is not lower than the previous low. So what is this then? What exactly happened here, right? What happened here is what we call a reversal. That's what I'm looking for, a reversal. Why is that significant? Because when we talk about the MACD, one of the hardest things for traders is anticipating when a reversal is happening, right? We'd like to know when a reversal is happening. We'd like to know the exact moment, but if we can get close, if we can get some kind of indication, there's a lot of value in that, right? Because if I know if a reversal is happening, then what happens is if I'm in a trade, I can protect myself. If I'm in a trade, I could close early. If I want to enter a trade early, if I want to be an impulsive trader and enter a trade early, this might give me that kind of indication that, you know what, this might be an impulsive entry that I'm looking for. All right. So how do I know, in other words, that this was coming? Because I had a pattern. I established a pattern over here. I established this correction, continuation, correction, continuation. Like, how do I know that this is actually coming, right? And one of the ways that this is very beneficial, that we know that this is coming, right, is through divergence, through the divergence part of the MACD. Let's first establish what divergence is, okay? So what we've been establishing so far is the convergence part of MACD, right? In other words, as we see that the candlesticks are going upwards, we see the histogram also going upwards, right? Let me just get my other tool, right? As we see the everything going upwards, right? We see the histogram going upwards. As we see this going downwards, we also see the histogram going downwards. So it's converging, right? All of this is convergence, right? We're all going towards the same direction. Divergence means we're going different directions, right? Divergence means we are going different directions. And that's significant because it lets us know that something's about to happen. If we're going different directions, like something is about to happen. That's what you need to know about the MACD divergence part, okay? So not for every single reversal do you always see divergence, but a lot of times you do see divergence, okay? In this particular example, you do see divergence. Let me show you how. Although, let me show you specifically how. Pay attention and let me know if you're confused. Anyone, let me know if you're confused, all right? So, although we are going along this path, right? We're going along this path and it matches up. I also want you to start looking at the height at which we're going, right? So let's look at the highs now, the highs, right? So this high, right? This high is over here. Let's match it up with this high, right? Not necessarily higher than the previous high, but just about the same height as the previous high. However, what do I see on the histogram? I see on the histogram that this high is over here, but this high is all the way down here, right? And I'm not reaching, right? Because if we match up the highs, we get somewhat of a straight line over here. But if you match up the highs on the MACD, you clearly have to do this. You clearly have to edge downwards. So already starting to see that we're getting some downward momentum, right? We're not going the same direction. We're starting to see some divergence on this area over here. All right, fine. We get to this area and we clearly see there's no arguments, right? In terms of the high of this move, this high is certainly higher than the previous highs, certainly higher, significantly higher than the previous highs. But what do we see on the MACD? Is the next peak that much higher? No. The next peak is literally over here. And if we just draw this line across, if this next peak is over here, that means it's not even higher than this peak over here, which coincided with this high. So we are losing momentum. In other words, we are starting to diverge over here, okay? Divergence is happening over here. So I'm starting to realize divergence is happening. So I need to be careful as I'm in this move. Yes, I'm capitalizing on this move, but as I'm paying attention to the histogram, I need to realize that divergence is happening. As I make higher highs, the histogram is not making higher highs with me. the histogram is starting to make lower lows. Okay, so as we finally get to the very last high, we get to the very last high over here. This high is clearly bigger than this previous high over here, right? But what do we see on the histogram? We get even lower on the histogram. We get even lower. So if we're just measuring the highs on the chart, and I know I got a whole bunch going on the chart, so I don't want to confuse you guys. So let me just start deleting some stuff because I want you guys to see this clear, right? I'm going to start deleting this. I want you guys to see this very, very clear. So we're just talking about the highs, right? So as I start measuring the highs of this move, the highs go like this. Let me touch all of the highs. Let me touch all of them. The highs go like this. On the histogram, the highs go like this. Is that the same direction? That is what we call divergence. That is what we call divergence, ladies and gentlemen, okay? That is divergence. So, in other words, if I want to predict that something like this, right, this reversal over here, that something like this is coming, and the reversal was short-lived, all right, because soon after we see the market came back. But the point is, you're going to get many instances like this where you get the start of a reversal and the trend continues to trend downwards. But if I'm going to anticipate something like this, I need to anticipate the divergence that's going on the MACD. All right. If I want to anticipate that this is coming and I want to protect myself, protect my capital, or in other words, I want to take an impulsive entry, I need to pay attention to what's going on the MACD. Let's go for a whole different example so you guys don't say I'm capping. Let's just go for a whole different example, whole different thing over here. Okay, same thing. We're just talking about divergence now. Okay, just divergence. So let's follow the highs again. We're following the highs of everything. All right, we have a high over here, over here, over here, over here. These are after all of the retests over here. Okay, on the MACD, let's follow along. We have a high over here, over here, over here, over here, and over here. All right, that's how everything coincides. Now let's draw up the highs. In like what kind of pattern does the high give me? Is it edging higher? Is it edging lower? Right? The highs on the candlesticks on the chart shows me this, right? So we're edging higher. Obviously they're highs, right? So on the chart we're edging higher. We're going upwards, right? But on the histogram, although it looked like we started to go upwards, right? But what happened? We didn't continue that. All of a sudden, starting around this point over here, it's starting to look like we're edging lower, and it's starting to look like divergence is happening. Okay, so as I'm going higher and higher on the chart, on the histogram of the MACD, I'm going lower and lower and lower. So if I'm at this point, how do I even let's just bring this all together. Like let's say I have knowledge on the charts. I know what I'm doing, right? If we bring this all together, right? What do I see here? I have a double top here. I have so much confluence here that, you know what? Something might happen around this area. Something just might happen around this area. And the beautiful thing about this is you could have easily caught this. How? By seeing that MACD divergence is happening, by seeing that we had a double top that rejected, right? And after it rejected, it gave you a push to the downside, It gave you a very small correction, retested that area once more, and then boom, gave you that huge move to the downside. And I say that to say because we can easily catch moves like these, and these types of moves, if you play it right, this could make your week. 100 pips could make your week. All right, that was a beautiful reversal. And obviously that's just a reversal. That's the start of the trend, you can continue like the same thing that we said about how the market moves, continue to keep that same momentum, right? So after that big move to the downside, just continue along. You know a correction is coming. You have your correction. Then you have your continuation, right? How do I know that this correction is valid? Look at the previous highs. This was the previous high. Obviously, this high, this most recent high, did not pass the previous high. So I know the correction is valid. So again, this is a longer correction. This took a significant amount of time. But if you are just this is where I start to tell people, like, if you just focus on one pair sometimes, I know like we like looking at different pairs, and that's fine. There's nothing wrong with that. But sometimes if you hone in on one pair and one trend and one thing that's going on, if you just hone in on one thing that's going on, sometimes you catch an entire move and that makes your entire week. You don't always have to look at different pairs. Sometimes one pair is more than enough, as long as you know where you are. But remember, it's hard to keep track of where you are if you're going and flipping back and forth between pairs. You know, if you're flipping back and forth, you're just looking for entries. You know what I mean? But you're gonna miss the entire thing that's happening over here, right? So over here, technically, we can still take this because the highs somewhat around the same, but I probably wouldn't take it because we probably getting too close over here, right? But you wouldn't be wrong if you took this, because technically, if you look at it, the highs are just about the same area. All right. So as this started to push downwards, I could have understood if you took the sell downwards. Okay, I could have understood that. But for the next move, when the high is right over here, you obviously see that a reversal is happening, right? And because the high was broken, I'm not going to look for down moves right now anymore, unless it shows me another reversal. Okay. I'm not going to look for down moves unless it shows me another reversal, right? Obviously, the market gets a little funky a little bit, but I'm just showing you again. All of this is the MACD. No matter how you use the MACD, whether you want to use it for confirmation of a retest, right? Because, like, again, look, what do we say about the red side of the MACD? We said when it starts to shade lighter, that means it's losing momentum. So if I knew there was a whole bunch of momentum coming down here, and I'm starting to see these lighter shades, 1, 2, 3, then I know that this is a correction happening. All right? I know that this is a correction happening. And if I'm looking for my entry, as this continues to shade darker, then I'm going to take my entry as I see not only the is it shading darker, but I'm starting to see the retest on the zero line. Okay, so there's many ways to use the MACD. There's general ways to use it just for general retest, but there's also interesting ways to use it in terms of using it for divergence. Okay, all right. I've been talking a lot. Is there any questions, guys? Any questions on MACD, on how we use it? Or maybe I didn't show the settings on what this MACD is on, but in the very beginning, if you go back, when this recording is out on YouTube, you'll see that I chose MACD 4C. There's different MACDs. The MACD 4C is what I chose. The inputs are 12 for the fast moving average, 26 for the slow. Okay, and this is all of the stuff you need to know, but that's what it is. What questions do we have? Let's see. Talking about trades. We're talking about trades. What chart would you use the most in regards to utilizing it? That's a great question. You know, it's funny. I haven't had a problem with any chart that I've used, but in terms of the smoothness, I like the USD pairs. In terms of smoothness with the MACD, I like USD pairs. So that's EU, GU, UJ, all of that. I like USD pairs a lot. All right. All right. Perfect. All right. Good. So it looks like we understand it. All right. So how, like, again, application now, and we're wrapping up here, but application now into the live market, because in the live market, like, the thing is, like, you learn all of this, but with the MACD, you won't get good at it unless you actually start practicing, guys. You really have to practice it, because the live environment is different from all of this. And obviously we're live right now, but when we are back testing, it's easy. All of this stuff is easy. You back test, all of this stuff is easy when you're back testing. You're gonna feel like you should get a PhD in back testing. But in the live environment, training your eyes to see all of this, like divergence is happening. I see the histogram is shading lighter, it's shading darker. I know that this means that, and that means this, and that means that. All of that stuff comes together the more and more you do it. Okay, so this works. Okay, don't like take this and then you go use it and then you start and you lose a few trades and you think MACD don't work. No, it works. It works. It's just that we have to practice using MACD over and over and over for us to get real comfortable with it. All right. Any specific way I should set up my MACD indicator? There's look online. You'll find many different types of MACDs. You even find MACDs that looks like this, but also has like a EMA crossover, right, or a moving average crossover. But this particular setup, like I said, is in these settings. But you don't even have to touch anything if you just type in MACD 4C. All right, that's the one I use, MACD 4C. You just type in MACD and then you look for 4C, MACD 4C. Specifically, the person who put it out there, the name is VKNO422. That's the specific one that I use. All right, guys. So I appreciate it. That is all. I don't have to bombard you guys with information today. But that's the MACD. We can definitely do a part 2. We can also get into different types of MACDs as well. We'll figure that out. But ultimately, use the MACD. Come back to me. Let me know what feedback you have for me, and let me know what questions you have, because we'll probably have to do another session on this again so that you guys really start getting this down. All right. I appreciate you guys for just listening. I appreciate y'all. All right. And that's what I'm here for. I'm here to serve. And until next time, guys, next Thursday is our next session. I'll put it out there what that will be on. Take care, everybody. Thank you.